Most people only read their homeowner's insurance policy after there's been a loss, and that is the worst time to find out that you may have a gap in coverage. Welcome back to the La Crosse Lawyer. I'm attorney Craig Steger, practicing in Wisconsin, Minnesota, and Iowa. How are you today, Leah?
I'm well. How are you?
Pretty good. Yeah, we've got some cold weather coming up, I guess, so I'm dealing with some stuff on the farm. There are definite disadvantages living in the country sometimes, so we have a well, and I'm having some issues with it freezing up on me, so I'm trying to fix that before we get really cold weather coming up this weekend. But yeah, we've got snow. Should have snow for Christmas. The kids are excited.
Yeah.
Ice on the water. We should be able to ice fishing, all that kind of fun stuff.
Yeah, it's been a good winter so far for all those nice cold weather snow activities.
Yeah, and even the people that like the snowmobiling may actually get a chance to use them. So anyway, and it's also a time of the year when you can have a lot of homeowner type claims. Could be fires for those of us that heat with wood at all, kitchen fires when you're cooking for the holidays, ice storms, things of that nature. So it's a really good time to talk about homeowners insurance, today's topic. And it's actually something I've been dealing with on a couple of cases that I have recently, where I've really had to deal with some homeowners insurance issues. And we did a video, I think a couple of weeks ago, on auto insurance, something that most all of us have, but probably don't really know too much about. Same thing with homeowners insurance, or for those that rent, maybe renters insurance. So today I wanted to kind of break down homeowners insurance and identify just kind of the key parts of it, some key exclusions, and some things that people might want to, talk to their insurance agent about, possible additional coverages and things of that nature. Sound good?
Yeah, sounds great.
So I guess I would say there are two main functional components to a homeowner's policy, and in some respects a renter's policy. But let's say a homeowner's policy, a farm policy. I think there's like an estate policy, or they call it it's sort of a hobby farm policy. I think those are kind of three different categories, but they kind of accomplish the same basic things. Number one is they provide coverage for your house, your garage, maybe some outbuildings. We'll talk about that in a little bit. Your personal possessions, if things get damaged, fire, tornado, maybe flooding if you have flood insurance, fires, things like that. Hail. Yep. It protects the structure, and maybe in a more practical sense, oftentimes it's protecting the bank if you have a mortgage on your place. So it's there to protect someone's financial interest, whether it's you, your bank, or both of you. That's kind of the main, kind of one big, kind of obvious part of home insurance policies. And the second one that people maybe not think about, it's actually a personal liability policy. And what do I mean by that? That protects you and your family, your assets, if someone is injured, especially if they get injured at your property. Someone comes and they slip off this, the deck or something like that, dog bites them and things like that. It protects against injuries that other people might experience when they're at your property, but it also actually goes with you. If let's just say you're walking down the sidewalk and you are not paying attention and you run into someone and you knock them down and cause them to be injured, your homeowner's insurance actually covers you from claims like that. That's called a liability policy. Really, it kind of goes with you everywhere you go, except if you're in business and if you're in a car. Those are kind of the two. Then you got auto insurance, or you have business insurance. But yeah, so it's a personal insurance policy to protect you if someone else has a claim against you for some reason. And there's all kinds of exclusions for intentional conduct. But if it's just kind of negligent, the things that we all do from time to time, whether it's causes injury or property damage to someone else, that's a liability component of a homeowner's policy, as well as typically a renter's policy. Okay.
Would that be standard in most homeowners or renters insurance policy? It's not something we have to add on or ask about?
Not really. I mean, it is, the liability portion is kind of baked into the I can't say that there aren't policies that don't have that, but I think it's kind of a fundamental part of most homeowners policies. And the questions then become, well, how much coverage do you have? What are the exclusions? And there are exclusions. We'll talk about in a little bit, that will help, I think, help people understand a little bit the scope and bounds of their liability coverage under their homeowners policy.
Yeah,
Okay.
I'll let you continue then.
So let's start talking about the dwelling coverage as it's called. And coverage A, we call it coverage A in the insurance policies, is the coverage to the house itself. If it burns down, if it's damaged, if it needs to be repaired, it's kind of everything but the stuff and people inside of it. Anything attached to the house basically is covered under coverage A. And one of the key things that people need to pay attention to when it comes to coverage A is it actual cash value or is it replacement cost? Your baseline policy is generally going to be actual cash value as opposed to the replacement cost, because what's the difference? Actual cash value kind of takes into account what's the value of it now. It's a little easier to think of it in terms of automobiles, okay? Let's say you buy a brand new car and you pay $25,000 for, no, you can't even buy a new car for $25,000. But let's say you pay $25,000 for a brand new car and you drive it for 5 years and now it's worth $15,000. Okay. Actual cash value or the fair market value of your vehicle, $15,000, right? Not what you originally paid for it. But you can't just buy another used house and put it up, right?
No.
And so actual cash value is going to be sort of the diminished value of the property at the time. Replacement cost is in fact going to replace it. If you have a 20-year-old home, there's a really, really good chance it's going to build the exact same house is going to cost more, maybe a lot more, right? And so that's where replacement costs, replacement coverage can be really, really important if you have a loss. So you typically get actual cash value as kind of base model, and then you pay a little extra to get that replacement cost, but it's good coverage to have. So coverage B under, let's say, the dwelling coverage tends to be other structures, other buildings that are typically detached. So anything that's attached to the house, if you have an attached garage, is going to typically fall under that coverage A. But if you have a detached building, an extra shed, maybe a pole barn, sometimes
Like
fences, things like that.
Would a machine shop count?
Yep. If it's detached from the house, it typically falls under other structures. And I'm dealing with a client right now who had this very situation. He had his farm for many years, and he and his wife lived in the house. When his wife passed away, he sold the house on like an acre, and he moved into a log, like a cabin that he had on one side of the property, right? Well, then he put up a pole building to put all his tools and toys and things like that. And the pole building burnt down, and he's dealing with this exact situation that it's an other structure. Typically, I think they usually insure those at like 10%, I believe, of the value of the dwelling, but it can vary by policy. One thing I'll say about all this, every insurance policy is a little different. Different insurance companies have a little different language in their policies, and states can determine what is required in insurance policies and what can be excluded. So all of this is sort of general.
Yep.
So you have to kind of look at the particular policy and consider the state that it's in to be able to answer these questions. But typically, a lot of them are going to have like 10% coverage of the dwelling as opposed to what's the actual value of the pole building or something like that. Okay. So that's something that's really, really important to talk about with your insurance agent. And especially if you build something, make sure you let them know so that it's covered, right? And you want to look at what do they have down as the cost attributed to the outbuilding, because I believe you can purchase additional coverage for those outbuildings, but it doesn't really come standard. So if you just say, here's the property I have, you may not out of the gate have full coverage for the value of that outbuilding, especially not the cost to replace it. So that's something to keep in mind. So then coverage C, and again, this is all under kind of the dwelling coverage.
Yeah.
Coverage C tends to be all of your personal items, things that are not attached to the home or the outbuilding. Furniture, clothes, appliances, pictures and artifacts, things like that, tools, kids' toys, all that. That falls in under other property coverage. And it can make a big difference whether that stuff is inside the dwelling or in an outbuilding. It's much, much better if it's inside the dwelling than if it's in an outbuilding, unless it's specifically listed in the so let's say you have a Kubota lawn tractor or something like that. Especially if it's not going to be parked in your attached garage, if it's going to be an outbuilding, you want to make sure that you specifically list that with the insurance agent and get coverage for that. Otherwise, it kind of falls under broad categories of other stuff that it's not very much, maybe $1,500 or $2,000 for things like boats and lawn tractors and things like that. So it's important to keep that in mind and let your insurance agent know.
And thankfully you've had some suggestions that we posted on your social pages about how to kind of inventory things, make it easy, make it by video or photo, so you don't have to be trying to recreate something that doesn't exist anymore. If
literally, if you just walk through your house with your camera and just videotape every room in the house, every closet. Now, you're not gonna see everything, but it will make it easier for you to kind of remember. Oh yeah, I forgot about that piece of furniture I had in that room. Maybe it's a room, corner of the basement you don't go very often, especially in your shop. I mean, I definitely think, especially it can be very easy to forget what you have for tools and wrenches and power tools and things like that. So it's a good idea to sort of inventory things, and I would say especially larger items. I think this is something I mentioned in one of our last videos. If you have something that has an actual VIN number or serial number, boats, outboard motors, lawn tractors, snow blowers, things like that, it'd be a good idea to either write those down, or even better yet, just get up close, take a picture, and save those pictures on your phone. Then you can more easily, then you'll be able to know exactly what year, make, and model that vehicle was, or that piece of equipment was later on. So that's those are kind of three big components of the dwelling coverage. One of the other ones we call is coverage D. And coverage D is costs that you might incur if you're displaced from your house for a while. Let's say you have some water damage or smoke damage and you have to move out for a while. You have to go rent a hotel or live someplace, or you have extra food costs because you can't cook and so you have to eat out. Those kinds of expenses can also be covered. Now, there's usually very specific limits on those things and how much you can recover, but those are kind of additional expenses that naturally flow when someone has their home either damaged or destroyed.
That's good to know.
Okay. Yep. I already talked about the kind of liability coverage, and the other thing that you kind of related to the liability coverage was what we call MedPay coverage, medical payments. If you watched any of our vehicles on any of our videos on auto insurance, you would have seen we talk about MedPay. Same thing in homeowners policies. It's a type of no-fault coverage. I think it's almost always limited to people not in your household. So if your kid falls and breaks their arm, I don't think MedPay covers that at home. But if someone is over visiting and they fall and injure themselves, we had some friends over a few years ago. They have small kids. We have small kids, and one of their kids, not sure where he was at, fell over and landed his hand on a board that had a nail sticking out of it. And they had to go to the doctor. And my homeowner's policy, the MedPay helped cover those medical expenses or reimburse their health insurance company for that. So that's a type of coverage that you have typically under your homeowner's policy and probably most renters' policies.
But specifically for guests, not for the dwellers.
Yeah, I think it's almost always limited to people that don't live in the house. I'm not. There may be. It's possible there are some insurance policies that will cover injuries to members of the family, but I think that's fairly unlikely. So typically it's people that don't live with you that get injured. As long as it happens on your property, the MedPay will kick in. And that's if there was no one at fault. Maybe it's their own fault. The liability is if you're at fault, if you actually did something, you didn't maintain the railing and it broke and they fell over. That's going to be a liability claim. Okay.
Thank you.
So what I want to talk about now is some of the common exclusions that apply. So what what the insurance company giveth, the insurance company taketh away. And they're numerous in homeowners insurance policies. So I wanted to talk a little bit about that, because that's oftentimes when people find out what their homeowners policy doesn't cover. So number one, and maybe the most common one, is flooding. Homeowners insurance policies typically do not cover flooding. And in fact, I think you can't get coverage for flooding unless you're in a flood. You would think it was the other way around. You would think that you would have coverage for flooding unless you lived in a floodplain, but it's actually the other way around. You typically don't have flooding coverage if you don't live in a floodplain, even though you can have these 100-year events. One of the things that we've experienced here in our area, in the La Crosse area, in the last, maybe it's closer to 20 years, 10, 15 years, we had some really, really heavy rainfall events, and people had mudslides.
Yeah.
The water came down so fast that water and or mud came down and damaged homes. Sometimes just destroyed the home. And earth movement is another one that is a common exclusion. So you can get into questions about whether those kinds of events are covered or not. Did the basement wall collapse? Which came first, the collapse or the water? And so I've been involved in a number of those kinds of disputes, but those are a couple of common exclusions. A lot of insurance policies, unless you specifically request it, pay for it, don't have coverage for sewer backup, which fortunately I've never had that happen, but I know people that do, and it's a terrible thing to have sewage in your basement. So you typically have to purchase that coverage if you want that coverage. Mold's another common exclusion, depending on what caused it. If you have, let's say, a water pipe breaks in the house and causes a bunch of damage, that I believe would typically be covered. And if it causes mold that has to be remediated, that is. But if it's just mold because it's let's say a poorly designed house or something like that, or like it's a leak that happened over time, may not be covered. Common wear and tear, negligence, your roof has to be replaced every so often, so you don't make a claim against your homeowner's insurance because it's, your 20-year shingles need to be replaced. Those kinds of things are not covered. Now, if you have hail or something like that, then yes, then you would be covered. But if it's just normal wear and tear and deterioration, that's not something that's covered by homeowners insurance policies.
So we're not telling viewers to wait until they're lucky enough to suffer an environmental disaster to replace their roof or their basement or anything.
Yeah, and even if it does, the reality is I believe the coverage is usually, the older the roof is, the less coverage you get. So even though you need a brand new roof, if you had a roof that was 3/4 through its useful life, they don't pay a full price. They may only pay a quarter of it. So that's something to keep in mind.
Yeah, so they know better than
Oh yeah,
than us,
the insurance companies know, and that seems fair too, right? I mean, but that's something to keep in mind is, if your roof, like I said, your homeowner's insurance doesn't cover normal upkeep, normal wear and tear, roofs, siding, windows, things like that, unless they're damaged in some sort of an event or occurrence, and even then they'll account for the fact that it's not a brand new house, it's not brand new roof, it's not brand new siding, it's however old and whatever condition it was before the hail or storm or whatever that damaged it. So a few other common exclusions that people might want to pay attention to is there's usually an exclusion for home-based businesses. So let's say you work out of your home. If you have people, customers, clients coming into your home, and let's say they fall or get injured, your liability coverage probably is not going to cover you. That you're going to need to indicate that you have a home business. Otherwise, if someone gets injured and has a claim against you as part of business operations you have, it may not be covered. So that's something to keep in mind. A few things that I wanted to also talk about is, if you have work done on your home, let's say you remodel it or you do replace the roof or whatever the case may be. Let's say you go from a shingled roof and you say, I'm going to put steel on. No, that's going to, be more valuable. You want to tell your insurance company that they have provisions in there that automatically increases the coverage. Now, of course, it will increase your premiums too. They don't do nothing for nothing, but it's important to let your insurance company know about those things. so that you can, have coverage in the event that there is a loss. And then there's all other things other additional types of coverages you can purchase that, let's say, account for, let's say a tornado goes through your neighborhood and there's a bunch of damage, and all of a sudden the prices of things are much, much higher than normal. You may need to have a separate endorsement that covers that, the fact that now the normal prices are like half again as much as they usually are. Otherwise, it might be what's the normal cost of repairs and replacements. So those are additional coverages that you might want to make sure that you have when you're getting your homeowner's policy.
Yeah, good
Sometimes
things to know.
if you, again, these are things that understandably people don't really think about until you actually have a loss. But it's good to know these things in advance. It's really good to talk to your insurance agent about these. Go over your policy. I mean, heck, with the technology of AI and stuff, you could upload your insurance policy to AI and ask it some questions. Now, I wouldn't rely upon that for advice or legal advice or anything, but it might help answer some questions, or say, hey, do I have flood protection in my policy? Or do I have this? It probably will give you a decent answer, and then you may say, tell me the questions that I should ask my insurance agent about this policy, and then you can go in and ask those kinds of questions when you hopefully sit down with your agent.
Yeah, and I saw in your article that we're talking about today in this episode something about the declarations page. Is that a good place to start?
Yeah. So your declarations page is kind of the Cliff's Notes, if you will, of your insurance policy. So most insurance policies are going to be thick. They, maybe 100 pages long, maybe it's 50 pages long. Lots of fine print, lots of definitions, lots of terms. The declarations page is kind of like I don't know if it's even on the proof of insurance that you keep in your car, but it's kind of like that 2-page summary of what coverages you have and how much, and it'll put dollar amounts in there. And so that kind of that should tell you, do I have replacement value coverage or do I have actual cash value coverage? Do I have med pay? If so, how much is the med pay? It'll give you each of the different categories of coverage that you have and how much coverage you have for each of those. And if let's say you have a home business and let your insurance agent know, there'll be a line in there has home business endorsement or something like that. Yep. The declarations page is definitely the place to start. But when you get into things like terms and definitions and exclusions, those are in the back in the policy itself. So you have to get an actual preferably a certified copy of your insurance policy. So anytime, like when someone comes in to us, let's say they've been in a car accident or they've had their house burned down. The first thing we do is always request a certified copy of the insurance policy. We want to know exactly what the insurance policy looked like on the day in question, not a generic policy or not the one that you issued a year later. I want to know which one was in effect at the time of the loss, and that's why you get a certified insurance policy.
Yeah.
And if people have questions about this, so like I wrote a whole thing on this on Substack. We'll put a link to the Substack. Andy put a link to the Substack article in the description. It's a good place if you want to go over and read that. If you're just so excited about this stuff and you need more of it, you can go over to the Substack and read that, and also subscribe to it. I put out something usually at least once or twice a week. So if you're interested in it, it doesn't cost you anything. Just get on my Substack emailing list and you'll get notifications. But I tend to put more detail, maybe some citations and things in that I don't cover in the video. So if you have more questions or want more information, head over to the Substack. Otherwise, people have questions, need to get a hold of me, want to schedule an appointment, just go down to the description, phone number, email, that kind of stuff's there. I'd be happy to talk to you and try to answer the questions that we can. Otherwise, leave a comment below if people have additional things that they'd like to know about this or any other topic that we talk about on this channel. We'll try to cover. I'll either reply to that comment or maybe we'll do another video or Substack article on it.
Yeah. I mean, I think we could talk about the most common homeowner mistakes in a different episode. I mean, we're already talked a lot about exclusions, and that could be interesting. So let us know in the comments if that's something you want to learn about.
Very good. Okay. All right. Well, thank you, Leah, as always. Thank you, everyone,
Yeah, you're
for watching. Let us know if you have any questions. Otherwise, until next time, everyone. Have a good one.
Thanks for watching. Bye.